Hey guys, this is the Forex Price Action Trading Course Part 2. This is lesson number 2, gauging the market bias with multiple time frames. Okay, let's get going. Alright, here's a lesson overview. First, I'll be going over the relationship of biases across different time frames. And then I'll go on to how to use multiple time frame bias relationships in trading. So in this section, I'm going to be explaining how to use this relationship of biases across different time frames in trading. Okay. Alright, bias relationships across different time frames. Now here's the key relationship. Higher time frame biases override the lower time frame's bias. Okay. So on this weekly chart of the pound dollar, let's say the future short strength of this pivot right here was stronger than the future long strength of this pivot, and thus from this point on, the weekly bias is down. In other words, price is likely to reach this pivot low before reaching this pivot high. Okay, so in this section, the weekly bias is down. Now let's go on to the daily chart to see the bias on the daily time frame. Okay, so on this daily chart, those weekly pivots that we measure the weekly bias with is from here to here. And thus that means the weekly bias in this area is short. Alright, but let's see what the daily bias is in this area. Alright, so let's say we measure the daily pivot right here against this pivot right here and found that there was more long strength than short strength. So according to the daily bias, price should reach this pivot high right here before reaching this pivot right here. However, you could see that the opposite is true. Price actually reached this pivot before reaching this pivot. And so although the daily bias in this area was long, because the higher time frames bias, in this case the weekly chart, was short, the daily bias prediction failed. In other words, the weekly bias stated that price is likely to reach this pivot low right here before reaching this pivot high. Alright, so in this sense, a basic relationship of biases across different time frames is that the higher time frames bias will override the lower time frames bias. And so on this daily chart, the bias was stating that price is likely to reach this pivot high before this pivot low. However, price did the exact opposite and came to this pivot low before reaching this pivot high because the weekly bias, or in other words, the higher time frames bias, was in the opposite direction, which was short in this case. Alright, and this relationship holds true all the way down to the 1 minute chart. And so this daily chart's bias will actually override the 4-hour chart's bias. Okay. So keeping this basic principle in mind, when analyzing through bias relationships across different time frames, no matter if you're a short-term trader or a long-term trader, I recommend using the monthly, weekly, and daily charts. Alright, so let me show you why I recommend this. Alright, so back again on this pound dollar weekly chart, the bias on this time frame, like I showed you before, from this point on was short. In other words, price is likely to reach this pivot low right here before reaching this pivot high. Alright, so now let's go on to the daily chart. Okay, so again on this daily chart, that weekly bias was measured from this pivot to this pivot right here. And so we found that this area right here on the weekly chart is short biased. And so we measured this daily pivot right here against this pivot and found that there's more long strength than short strength. Thus that means on the daily chart's bias, price is likely to reach this pivot high before reaching this pivot low. Okay, so now let's go even lower onto the 4-hour chart. Alright, so on this 4-hour chart, that weekly bias was measured from this pivot right here to this pivot right here. And so in this area right here, the weekly bias was short. And moreover, in this area right here, we measured the daily bias. And the daily bias was long. And so let's say trader A only used the daily 4-hour and 1-hour charts to trade, in which case he or she will not be aware of the weekly bias, which is actually short. and only take into consideration the daily bias, which is long. Thus, let's say that trader measured the 4-hour bias of this pivot against this pivot right here and found that there was more long strength than short strength. Or in other words, found that price is likely to reach this pivot high before reaching this pivot low. And as a result, we'll be taking long trades as price pulls back down to the lower pivot. However, as you can see, price hit that pivot low before reaching that pivot high. And the reason why that trader gauged the market bias incorrectly is because he or she is not using the even higher time frames bias, which is the weekly chart. And in this case, that weekly chart's bias was in the opposite direction, which was short. So if trader A were to measure the biases correctly using the multiple time frame bias relationships, if they wanted to trade with the trend, or in other words, if they wanted to trend with a higher time frame bias, in this case, they should have been looking for points where there's a short bias between pivots. Alright, so now let's go on to learn a basic way that we can use these multiple time frame bias relationships in trading. Okay, next slide. Alright, how to trade using multiple time frame biases. Number 1, acknowledge the higher time frame bias and beware of bias changes. Alright, so now we're back on this pound dollar weekly chart. Now if you watch my forecast and analysis, you could recall that the bias between this pivot right here and this pivot right here was short on the weekly bias. Thus, if you're looking for trades that are in line with this weekly bias, you'll be looking for short trades on the lower time frames. However, if you recall at this point right here, there was compact long price action that formed. Now, like I explained in lesson 1 of this course, compact price action is a common way to know if a bias has changed. And so at this point, when this compact long price action formed, the bias became long. So in other words, up until this point right here, this weekly chart's bias stated that price is likely to reach this pivot low right here before reaching this pivot high. But then halfway through this pullback in this area right here, the weekly bias changed to long. So in other words, it stated that price is likely to reach this pivot high up here before reaching this pivot low where that compact long price action formed. Alright, so in this manner, you always want to know what the higher time frame biases are. Now if you're trading on the 4-hour chart, that means you want to know the bias on the monthly, weekly, and daily charts. Okay, let's go on to number 2. Alright, number 2. Trade in the direction of the higher time frame bias if trend trading. If the higher bias is contradicting, wait for the biases to align. Alright, so on this 4-hour chart, that weekly bias was measured from this pivot to this pivot right here, which stated that the bias on the weekly chart in this area was short. However, because compact long price action formed on this pivot right here, the weekly bias in this area changed to long. So if you're trend trading, or in other words, if you're trading on the lower time frames in line with the higher time frames bias, in this area right here, you want to be looking for 4-hour pivots that show more short strength than long strength. Because until this point right here, the weekly bias, again, was short. However, when that weekly bias changed from short to long at this point, in this area right here, if you want to trade with a higher time frame bias, you should be looking for 4-hour pivots in which there is more long strength than short strength. Alright, so let's just do a couple more examples. So in this area right here where the weekly bias is short, let's say you found on this 4-hour chart that there was more short strength than long strength in this pivot. Or in other words, price is likely to reach this pivot low right here before reaching this pivot high. This will be trading in line with the higher time frames bias. Moreover, in this area right here, after the weekly bias changed to long, if you found that this 4-hour pivot had more long strength then short strength. Or in other words, price is likely to reach this pivot high before reaching this pivot low. This would also be trading in line with the higher time frames bias. Now, there's also counter trend trading, in which you knowingly trade against the higher time frame bias. However, that's beyond the scope of this intermediate course. So for now, we'll just stick to trading with the higher time frames trend, or in other words, the higher time frames bias. Okay, let's go on to number 3. All right, number 3. Targets are in accordance to the time frame future strength was measured. Okay, so we're back on this 4-hour chart. So let me explain this to you with hypothetical trade situations. So again, that weekly bias was measured from this pivot up here down to this pivot right here. And this weekly bias states that price is likely to reach this pivot low right here before reaching this pivot high. However, because of that compact long price action and the bias change on the weekly chart right here, at this point the weekly bias changed to long, or in other words, price is likely to reach this pivot high before reaching this pivot low. So based on the weekly bias, another way to refer to these price levels that I just drew out here is that on a weekly bias, the main target, since it was a short bias, will be right here, while the main stop loss level on a weekly basis is this pivot high level right here. And moreover, on the weekly chart, since this compact long price action changed the weekly bias to long, and thus that stated that price is likely to reach this pivot high up here before reaching this pivot low. Another way to refer to these two levels is that this can be the main stop loss level, while this pivot high is the main target level. However, you have to remember that these targets and stop loss levels are derived from a weekly chart. Or in other words, this main stop loss level right here and this main target right here are weekly stop loss and target levels. So let's say now that you know that the weekly bias in this area is long. And if you're trading with the higher time frame bias, you'll be looking for pivots where there's more long strength than short strength. So let's say on this 4-hour chart, you measured this pivot against this pivot, and you found that there was more long strength than short strength, which is in line with the weekly long bias. However, this measurement of bias is based on the 4-hour chart. So in other words, this measurement dictates that price is likely to reach this pivot high right here before reaching this pivot low. So for example, if you're basing a trade long based on these 4-hour charts pivots, the targets and stop loss levels should be on the time frame that you measure the future strength, and not a higher time frame's target or stop loss level. So hypothetically, let's say a trader took this long trade because it's in line with the higher time frame's bias. However, their main target should be at this pivot high and a stop loss at this pivot low. And perhaps this weekly bias's target right up here can be used for extension targets. Now, there are ways that price shows that lower time frame pivots future strength actually reach higher time frame target levels. However, that is beyond this intermediate course. So for now, just remember, if you measure the future strength of pivots on this 4-hour chart, those 4-hour pivots should be used for targets and stop loss levels, and not higher time frames targets and stop loss levels. Okay. All right. Okay, next slide. Okay, so that was it for that lesson. In the next lesson, we'll go over bias changes with new pivot strength. So if you recall in lesson 1, I mentioned there are some basic ways that biases change, and one of those ways is with new pivot strength. So in the next lesson, we'll take a deeper look into this particular way that a bias can change. Okay, like always, if you have any questions about this lesson, please leave it in the comment section. So thanks for watching, and I hope you guys have a great rest of the day. Okay, bye.